Hello guys, it's Max here from Daily Market Movements, and in front of me is the Nasdaq 100 futures chart. In today's trading session, we have drifted lower ever so slightly. We currently find ourselves trading below that 15,000 area. I'm still waiting on my sidelines here, guys. Why? Because historically speaking, August is not a very good month for the stock market when it comes to its performance. And then, of course, September is the worst month of the year. And last year we had that 5 to 7% correction in the indices, and I am anticipating the same here as we have traded very, very high throughout the year so far, and we're yet to see any major pullback. We had this back in May and that back in February and March, but apart from that, since the beginning of May, we've just seen a huge rally towards the upside, and I think that we do need to digest these gains. There are a few things out there that currently worry me in, with regards to the performance of the stock market going forward. First of all, is whether Jerome Powell will start to become more hawkish. Now, as soon as he announces that he will start to taper the interest rates, you can expect a 10% pullback. I think a similar thing happened back in December 2018. That was when the Fed announced that they were going to start hiking the interest rates for the first time since the financial crisis, and I think the Dow pulled back 10% instantly within a day or two, and I do expect to see the same here. So that does worry me, but of course the big question is whether Jerome Powell will raise start to raise the interest rates. Friday is going to be quite worrying due to the fact we have the non-farm payroll figures coming out. I am anticipating a very healthy number. And we currently find ourselves trading in a situation where good news is bad news and bad news is good news, because the jobs number is an area where Jerome Powell says that he wants to see a massive improvement. Now, if we get that improvement, then it could put more pressure on the chairman to start to become more hawkish and to start raising interest rates. But then on the flip side, we have inflation. Now, the issue in the US economy and across the globe right now is inflation, okay? And a lot of people are arguing whether, inflation's here to stay or whether it's temporary. Now, Jerome Powell thinks it's temporary, but where I think that he may be wrong is we currently find ourselves trading in a situation where, for the first time in a long time, the demand for products is currently outweighing the supply. Now, back during the 2008 and 2009 financial crisis, the Fed and central banks around the world didn't do enough. And I think that they've learned from their mistakes during this pandemic, and we have seen a record amount of monetary and fiscal policy. We have interest rates down at all-time lows, and we have up to $120 billion a month being purchased in debt assets, stocks, bonds, what have you not. And the Fed is still yet to announce when they're going to take their foot off the brake. But the issue at the moment is that, the demand is outweighing the supply. And, I think you're seeing this with the chip shortages, for example. You're seeing it with certain materials out there, whether it be building, with wood, steel. There is massive shortages everywhere you look. I think one of my friends went to Aldi the other day and he wanted to buy a brand new car. He wanted to pay it all up front, and they said, listen, we're not going to lie to you. You'll be waiting minimum 2 to 3 years until you will be able to receive your vehicle. And that's just because there's chip shortages, there's material shortages, as I just mentioned. And although this is a very good thing, it's actually not, because if these shortages last for a long period of time, the chip shortage was expected to have, finished by now, or especially going into the end of this year. But as it stands, there's no signs of this chip shortage coming to an end. And in fact, people are now expecting it to go into 2022. Now, this is going to cause inflation. And, inflation like this can be here to stay. So if the shortages do not stop, then inflation will get higher and higher and higher, and it will be here to stay. And then that will, of course, cause Jerome Powell to keep interest rates low, which, you could argue would be good for the stock market. But that being said, when you have inflation at the levels that we're currently seeing, and if it is here to stay, that is actually negative for consumers. It's negative for companies as well, because they're going to have to put their prices up. So we find ourselves in a very unique situation at this moment in time where people have loads of excess money. They have loads of money saved up in the bank, and that's just because the government has been throwing money at everyone. And when I say everyone, I mean citizens, I mean businesses, I'm getting letters through the post here in the UK, and I'm getting told, you're able to apply for this grant scheme. You can have up to £800 a month. You can have 6 months worth of this money. And I'm just thinking, I don't even need it. I don't want it. But I'm getting all these letters through the post, basically chucking free money. People are able to get debt very, very cheaply. Some people are able to get loans from £20,000 to £50,000, only paying back 2%. Of course, all these businesses have been given all these stimulus packages, all these grants. Some, up to like £20,000 or £30,000. It is ridiculous, and I think that one thing that we're learning very rapidly is that yes, it's good when consumers have excess money in the bank because they've been able to inject it into businesses. But when everyone, and when I mean everyone, nearly every single citizen in the rich countries right now, when I say the rich countries, I mean Europe, I mean the UK, I mean America. When everyone has excess money in their bank account and they're wanting to consume at the same time, we're now starting to realize that the world actually cannot supply for the demand that is currently here. So I would definitely be very, very cautious with inflation going forward. So, to the point, I am still going to be sitting on the sidelines here. I am anticipating for a 5 to 10% correction. Will it happen this week? Very unlikely, but will it happen, before the end of September? I'm very confident it will. And when the market does pull back, I'm going to take full advantage of it and take this opportunity with both hands and buy into the value. 50-day EMA is where I would be willing to put some money to work. But I think personally, going into September, we could breach the 50-day EMA to at least 14,000, and this is a fantastic area to then be buying.